So my name is Mitchell Virkler,
And I'm Stone Welker.
and the article we had was GE powered the American century, then it burned out. So our agenda for today is we're going to do a little overview about the company and then go into a little background of the company and how it rose to prominence and then how it ended up falling and why it fell. And then we're going to go into some more recent history about the company and some future forecasts. And then we're going to wrap it up with the FSA perspective, kind of tying things back to the class, and then we'll open it up for questions. So a little bit about General Electric. It's an American multinational conglomerate incorporated in New York City and headquartered in Boston. So a conglomerate is a combination of multiple business entities operating in different industries under one corporate group. This usually involves a parent company and many subsidiaries that operate under the parent. And oftentimes conglomerates are huge companies that have many different industries and are multinational, just like General Electric. And their products and services range from aircraft engines, power generation, oil and gas production, medical imaging, financing, and industrial products. So as you can see, they cover a lot of different products and they have a lot of different market segments, which include
some of these businesses. They don't seem too related to each other.
Yeah, I think they just tried to go expand into any business segment that they could kind of take over in.
Okay.
So they just tried to get a wide range of things. So their segments include power, renewable energy, oil and gas, aviation, healthcare, transportation, energy connections and lighting, and capital. And their current trading price as of June 19th was $10.34. So here's a little bit about the beginning of General Electric. GE helped to invent the world as we know it today. And what I mean by that is the world today that we know is centered around power and electricity. And I think GE kind of started this. We live in a world that's always wired up, plugged in, and switched on. And the brilliant ideas of Thomas Edison, coupled with the audacity of JP Morgan, created a powerhouse company back in April of 1892. And they quickly provided power to all cities, neighborhoods, and street corners. The modern GE was built by Jack Welch, who was the youngest CEO and chairman in company history when he took it over in 1981. And he was at the head of GE for 20 years and became a household name. So here's a little bit about GE under Jack Welch. He eliminated around 100,000 jobs in his early years as CEO, and he used a rank and yank strategy, which he insisted that managers fire the 10% of performers each year who failed to improve. So pretty much if the employees weren't improving, he just yanked them out of the company.
What do you think about that? He almost automatically takes the bottom 10% every year and cuts them?
Yeah. And like it says, he eliminated around 100,000 jobs in his early years as CEO. And that was actually a tactic that was implemented by many other companies at the time because it proved to be successful in this time, but in the long run, it ended up, I think, hurting them.
Yeah, I had to do the same thing. I had to get rid
and he
of
also
that.
had a slogan that should say fix it, close it, or sell it. And that was a process where Welch got out of any businesses where GE was not a market. So he definitely had a willingness to expand into growing businesses and shed struggling businesses. He's very driven by results, and he was obsessive over setting targets and hitting them. So like I said, any businesses that weren't hitting these targets, he would just shred them off and look to expand into different businesses. So GE operated like a collection of businesses protected under a giant bank. And the giant bank that I was talking about is GE Capital, which is their financial services division. And that really powered the company's growth throughout the 20th century. It rivaled the biggest banks in the country, competed with Wall Street, and employed hundreds of bankers. The capital part of the business kind of kept them afloat. It sucked in debt and spat out money. It gave GE a AAA credit rating, which allowed them to borrow money very inexpensively, which gave them a huge advantage over other banks. And GE Capital allowed them to smooth over cracks in other parts of the company that weren't performing as well,
What do you mean by
including
that?
like the power.
Can you maybe
So like so much leftover cash from capital that they were able to, I don't know, in the article it said they were able to smooth over cracks in the other parts of the business that like weren't performing as well in their like earnings reports to keep like their investors and Wall Street happy.
so they use money from that? Actually, GE Capital was making money, and it masked the losses in other areas.
Yes, exactly.
Ah.
And the extra cash also flowed up to like the headquarters, and it powered the development of new jet engines, and it powered the dividends that they were sending out to shareholders. Like it says here, to over 600,000 accounts. So all these tactics that I mentioned, really they led to eye-popping financial results and success. GE is the most valuable company in the U.S. In August of 2000, and they were worth around $600 billion. They were one of the most widely owned stocks with 10 billion shares outstanding, and they paid a massive amount of dividends to over 600,000 accounts.
Mm-hmm. Wow.
So now Stone's going to get into GE under Immelt and kind of the fall of GE.
So Jeff Immelt is the CEO who took over, and only 4 days after Welch's resignation was the September 11th attacks on the Twin Towers. And so this was a complete shock for everyone in the United States, but the company as well. And this completely grounded their airline industry. And it also cost GE insurance businesses nearly $600 million for reparations claims on the towers. And then moving forward a couple of years, you have the 2008 financial crisis. And this is where GE Capital, who was their strongest revenue generator, completely tanked to a point that they believed was irreversible.
Were those losses on loans and such?
For GE Capital?
Yeah.
Yeah, I mean, losses on loans and things like that, yeah. And in 2007 to 2008, the stock price dropped from $40 to a low of $6.66. And Immelt was forced to have an emergency plea deal in which the Federal Reserve was forced to kind of save GE and keep them from going under. And so then after this, there was a lot of hesitation from investors just about the company overall and their leadership. And after GE Capital sort of went down, they realized that GE was volatile like a bank in times of financial turmoil. And so rather than a typical company that would only struggle in their segment, since they're so large, it really hit them from a ton of different angles. And so investors started to think of them more like a bank rather than a company. And GE ended up selling their capital branch, which was bringing in nearly 50% of their revenue. And investors weren't sure about this decision either because it had brought in nearly 50% of the revenue, and they didn't really have an idea of what they were going to use to replace it. And other decisions being made by the board of directors in Immelt were unfavorable for the company's future. For example, Immelt overpaid on an Alstom deal because he had a reputation for doing so. He would tend to get very excited about new deals and be willing to close the deals even if he was going to pay a little bit more just to get it done.
Something like Kraft Heinz, similar thing.
Similar, yeah. So then after Immelt, Immelt was forced to step down from the CEO position just because he was continually setting these projections and making promises to investors that were not actually being met. So he would forecast sales for the following year in different markets, and they would almost never come true. And at the Sarasota conference, he was criticized on stage for his misjudgments and downfalls and was being asked questions that he was unable to answer. And this was a really big hit on his reputation, and it kind of ruined his image on Wall Street. And so he realized that it was time for him to move on. So then John Flannery took over as CEO. He was the former leader of the GE's healthcare unit, and he is remarked as very opposite from Immelt as a leader. But even though that, he was unable to make any meaningful changes still, and so the stock continued to fall. And in 2017, the stock fell from $29 to $17.50 under Flannery, and he pretty much warned investors that it was going to take years for him to fix this company, and that rather than focusing on being as big as they possibly could like they had in the past, they were going to start focusing in on the things they were really good at, which was power, aviation, and healthcare. And as they were trying to make this transition, there was a lot of uncertainty about their board of directors. In 2008, they struggled to develop a better board, and they would hold these overcrowded meetings with 20 to 30 people, potential candidates, when they really wanted to get it down to 12 board of directors. And this really wasn't going anywhere. So then the Electric Products Group Conference, which is the same as the Sarasota Conference, came around, and it left investors uncertain for a second year just because they weren't really able to answer questions, and there was a lot of uncertainty within the company. And so dividends from the company and the stock evaluation continued to fall through 2018 and 2019. So what does the future look like for GE? Flannery is out now, and this guy Culp is in. And so after serving the shortest term in GE history of only 14 months, John Flannery was fired, and the man who they had recently elected, the head of the board of directors, has taken over. An economic downturn still continues for GE, and their stock still continues to plummet. Like we said at the beginning, it's around $10 today. And some economists actually feel so bad for the situation with this great American company that they've kind of stopped commenting on their status and pulled back some of the remarks they had said before and just kind of are letting them try and figure their thing out. And so Culp's put forth a plan of attack. He hopes to establish a stricter budget and better financial structure for GE in those same three departments: renewable energy, aviation, and healthcare. He also quickly cut GE's dividends down to a mere penny in 2018. And so he has let investors know that that's set to recover over time and slowly increase. And a statement came out from the former CEO, James Welch, who said that he thought he had made all the right decisions for this company, but they didn't work out, as Culp still has been unable to save GE even any more than Flannery did. And so you can see that even former CEOs are starting to lose hope for this company. And as of early 2019, their sales in recent years have plummeted by nearly 30%. Their public image continues to take a beating. And rather than being such a financial empire like they used to be, they're just going to focus in on a few areas which they're good in and try and rebuild what was once great.
How did this all happen? I mean, it's like they had great things and they just like tanked.
It seems like they might have gotten a little bit too big too fast, and so they weren't able to take care of all the mistakes coming in. And then, like Mitch had said earlier, how GE Capital was supporting them a lot more than it should have been and a lot more than investors realized. I think that was the biggest hit for them, the financial crisis. And once capital failed, they really just didn't come up with a plan to replace it.
Okay.
And I think another thing was, sorry to interrupt, but their management after Jack Welch was pretty poor. I mentioned in the article that I think it was Immelt after Welch. He was very like indecisive and he wasn't very confident. And especially during these like summit meetings, it said that like every time he spoke, this stock price dropped and investors were just getting out. So I think management also played a big part, and along with the stuff that Stone was saying. So I think it was just like a mixture of things. The 9/11 attacks too took a big hit on their airline segment, and he said the economic crisis as well. So
how do you think employees were reacting to this as all this was going on? Or how would have you reacted if you were an employee of GE when they were going through all this selling stuff? And
I think I would have had a lot of questions, especially to management, and I would have wanted answers as to why this was all happening. And maybe I would have wanted some clarity on what their future plans were looking like, since obviously after like 2000, the company was definitely headed downhill. I would know what steps they were going to take to try to bring the company back up to prominence.
And I think I would have also been very concerned with their inability to answer questions from investors and things like that, because
Yeah,
if I was an employee and leaders were unable to answer these questions, then I would realize that they don't even know what the future is going to look like for the company, and so I'd be nervous about the security of my job.
exactly.
Hey, let's assume the two of you guys are pretty smart. What have you been looking for a new job?
I think
You
so,
were
yeah.
there and you saw all this, and would you look for a new job?
I think
I think
especially
so,
if I
yeah.
was a younger employee, I would have. I mean, if someone had been with the company for a long time, they may have felt an attachment and wanted to try and stick with it and help them get out of this turmoil. But I think if I was a younger employee just getting started, then I would certainly be looking for a different path and somewhere that's a little more promising.
Because that could have slowed down, that could have hurt the company too, that your best and brightest are going to leave.
Yeah.
Yeah, I'm sure that definitely had an impact as
I
well.
never thought of that. Good points.
It was, I guess, internal factors and external factors that were kind of affecting the company in a negative way.
Okay.
Yeah, so I think we have one more slide. So with that being said, I just wanted to kind of tie it back into financial statement analysis. From an FSA perspective, you can take a lot away from the rise and fall of General Electric. As investors, I think it's important to look closely at financial statements, 10Ks, footnotes, and expert analyses, etc. And it's important to take into account each of these to form a holistic perspective of the company. Since companies can easily manipulate their earnings to make it seem like they're performing better than they actually are, for example, GE Capital, since much of the company's success was dependent on capital, like Stone said, I think they're a little more volatile than some other conglomerate companies, and they're at risk for any financial crisis hitting that capital would bring the company down with them. And like I said earlier, they use capital to smooth out cracks in other parts of the company. So other parts of the company weren't performing as well as capital. So they just kind of depend on capital. So I think with that said, it's important to closely monitor companies that you are invested in and to see if the company as a whole is performing well or they're just relying on one segment of the company. As is the case with GE, companies can perform very well, but can start to struggle significantly due to several different factors, such as change in management, economic hardship, and other external factors. So it's important to keep an eye on these things as an investor to see how you analyze the company. So, and then we have questions.
What did you learn about yourself and your ability to analyze a lot of information that you had in that article?
So I think, especially along with how they use GE Capital to kind of smooth out the cracks in their business, I think it was very interesting because when we were looking at the 10K and 10K for years over years, it was interesting to see how that all went down and how most people probably wouldn't look that in depth into the company if they were deciding to invest or not. And if you just simply look at the 10K and do an analyzation, you'd realize around 2008, that as financial times were starting to become rough, that they were probably going to face some choppy waters. And it was just very interesting to see that you don't really need to do much to dig a whole lot deeper. And
good point.
yeah, I just think a lot of investors should do that more.
Yeah.
Yeah, I would agree with that for sure.
Good. Any closing comments?
Just that it was very interesting to see the kind of rise and fall of General Electric and the whole scope of things and how that can happen to really any company that is performing as well as they did. So it was interesting.
Sometimes gets in the way.
Yeah, and it was interesting to see the things that caused it and how kind of one thing just led to another and they just kind of piled on top of each other. Which really created an astronomical impact to the company.
Yeah, for sure. Good job.